Hi, this is Kim Watson, Freezy Trader. Welcome to an exclusive review of the key economic news events which are being released in the coming week. Okay, the big story is the Greek agreement is not a solution. I think everyone has worked that out. It's just a four-month extension of the time period in terms of trying to find a solution, if there is such a thing. Now, obviously, the Greek people themselves want to stay within the EU. However, it's and with the euro, should I say, as well, in particularly, whether that is a really serious possibility as we move forward, and whether there can be any sort of haircuts in the debt levels or any changes to the debt solution, obviously that is going to have to be negotiated pretty hard over the coming months. But it certainly looks like in the days, weeks, months ahead, we'll get some volatility from the euro pairs. Now, this euro volatility and the potential risk has spurred on some brokers' emails. We saw some last week. We was forwarded to some that had been passed on to us, which suggested that the brokers were getting quite edgy about the risk that traders are probably putting on, and the ensuring that the traders have got sufficient liquidity and funds, equity, to pay any possible large moves or pay for any risk that runs against them. One thing you should always remember with currencies is, unlike shares, where if you own a share, the risk is the value of the share. Effectively, there is nothing beyond that if you're just owning shares. With currencies, there is risk beyond your actual trade. So this is the situation with the Swiss National Bank when they removed the floor. It effectively meant that there were people left with $5,000 accounts with $50,000 debts. So you must ensure, if you're trading the euro dollar or any currency which has a peg to it in the DIT as well, that you should be aware of this and ensure that you've got sufficient capital there. Also, you've got stops in place, and you, if necessary, hedge position. So that certainly the brokers are eventually doing something, not necessarily for their clients, but certainly to safeguard themselves. Okay, looking forward then to the week, we've got the European German IFO business climate coming out at 9 o'clock. This has been increasing for the last few months. It doesn't generally create a great amount of volatility, but you never know. It's one of those very exceptional reports which can from time to time give a bit more movement, but generally it's a 10-15 pip move. Tuesday we've got a little bit more coming out. We've got the European final CPI. Now, we've had the cheat sheets or the flash figures already out. These figures, the final figures, not less likely to be quite such movers, but of course if we see the CPI dropping even further, and there's sort of amendments on previous figures, we could well see some, again, further volatility. The main mover on the main volatility may come from Draghi, but not necessarily Tuesday's meeting, where he introduces the new €20 banknote at 2 o'clock. They may just have to wait for Thursday for that. More importantly, though, on Wednesday afternoon at 3 o'clock UK time, GMT, we've got the US Fed Chairwoman Yellen speaking. She's testifying to the Senate Banking Committee. Now, the minutes of the latest meeting suggested there was some dovishness there. There's some concern about interest rates, exchange rate, should I say, and there's a bit of a mixed pool there, suggesting there's some dovishness, and whether they're going to start sort of backing off a June rate rise, which is fairly well expected. Obviously, jobs reports, etc., are strong, but we'll have to wait and see what actually runs from there. But this meeting, this what becomes as an initial statement that's given at 3 o'clock, and everyone can read that. That'll be the initial point. But it was the Q&A that comes later, which may create even more volatility. So, moving ahead to Wednesday. Once again, Fed Yellen testifies, this time in front of the House of Financial Services Committee at 3 o'clock. Largely we will have seen the volatility the previous day, but we may just get the odd question or something. It creates a bit more volatility. But more importantly, then we got the ECB Draghi testifying at 4:30 before the European Parliament in Brussels. So that in itself could create quite a bit of volatility around about 4 o'clock, 4:30. Thursday, we've got the UK GDP second estimate. Generally, is coming very much. I can't remember one that's missed. This is the first. So generally, the figures are very, very close. So it's coming at 9:30. Not expecting much in the way of volatility from that. We've got the ECB outro figures though at 10:15. Now, certainly, this is much more important. It's the third operation. The first two very much underperformed effectively, although slightly better than previous. This last one, I think it was about 130 billion last time versus about 80 billion this first time. So the problem is, this is money that's been lent on the proviso, should I say, that it actually goes and is lent to businesses. Now, the slowness of it so far is just showing it's not really working massively, but we'll see. It may have picked up. Any sort of larger auction may slow the pace of the quantitative easing, or vice versa. Okay, then later on we've got the US CPI figure coming out 1:30. I don't think it's going to make a significant difference, although we could get quite a bit of volatility sitting around it initially. The inflation's been dropping for quite some time in the US. It's sitting there quite stubbornly low. Could drop down further. If it drops down further again, this sort of edges away from a dollar increase towards June, and it may just see the dollar sold off a little. At the same time, we've got the Canadian CPI figures coming out as well, and it makes it a bit difficult if you're trading the Canadian US dollar, but if you're trading one of the other Canadian pairs, maybe you could get some decent movement and volatility off of that. Finally, Friday, European German CPI figures are coming out all morning. These, because of the way they're released, you get little shots of volatility, but nothing significant in terms of the movement in general. And then later on, you've got at 1:30, we've got the US prelim GDP. Now, again, this is the second reading. They can be a lot more volatile. It's much more difficult to count all the beans in the US than it is in the UK. So we could get some action off of that, but it's not one I'd be looking to trade. But as I say, it's just watching out for the volatility there. Okay, that's it for me. Hope you have a great week. I'll be back next week. Bye.